Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on SPY, IWM, and QQQ on the daily and weekly time frame. Huge day today to the downside, and the good thing is it was very clear and there is a lot of conviction. We're not dancing around the middle Bollinger Band. We held it forever, all of 2017, and when we lost it, boy did we lose it. So huge bear volume, and a close at the low of the day favors momentum to the downside. We saw very few bounce attempts, and they were very weak. We are oversold on the hourly time frames on a lot of individual names, but that doesn't mean a whole lot. We can drop down into the teens, into the low teens on these RSI levels, so we need to be very patient if trying to play an oversold bounce. Don't try and catch this falling knife. Wait for some signals that the bulls are showing up. I personally am looking at the XLF financial sector to start its bounce. It's had a bit more heads up to the downside. It's been weaker over the past 3 days than the S&P 500, and in my opinion, it dumping is what started the catalyst sell-off today. So SPY closing down at the lows, losing the middle Bollinger Band, and losing my two key must-hold levels for the bulls, 235.17 and 234.72, previous consolidation lows. And what we have now is our low, lower high, lower low. The trend and the momentum has completely shifted in the opposite direction. So previously, I was saying the bears need to prove to us that they are going to take control here because the bulls have been in full control the entire year with no sign of slowing down. Well, here's the bears waking up and proving it to us in a big way. Now it's up to the bulls to prove to us that they are putting a stop to the bleeding and trying to turn things around. And we need a bullish reversal candlestick on the daily time frame. But again, the close at the low of the day and the volume has me looking for further downside momentum. That was a very weak close today. If you look back at the dump we had to start 2016 in January and February, it started with closes and gap downs. Closes at the lows and then gap down opens. And if we see a gap down open tomorrow, we're going to be looking for further downside, and we'll be watching XLF for an oversold bounce to indicate short-term oversold bounces. But as of right now, the bears are taking hold. Bearish reversal candlesticks on all kinds of individual names, weekly charts. And we've got SPY seeing the first real consolidation that we've seen since the election. And we're going to be watching to see where we close relative to the 8-period exponential support of 233.65. If we lose that level, I see a gap here on the weekly time frame at 230.77, and that will be a potential target as well as the 50-day moving average, 231.51. So 50-day moving average comes first. Gap on the weekly time frame, 230.77, will come next. IWM, how's that for a dump? Significantly weaker than the S&P 500. Well, I won't say significantly, but we'll call it weaker. A huge red day, and we're looking down at support now. I'm looking here at 133.89, 133.12, and those key levels are the lows of the last 3 months. The weekly time frame, if we lose this middle Bollinger Band, we're looking down at 133.12. That's a must-hold level. If we lose that level, we lose the higher low pattern on the weekly time frame. For SPY to lose the clear higher low pattern, really, we would have to lose the low of the last consolidation of 221.77. Nowhere near happening right now, but IWM closer to losing a key support. And we're also on the verge of a bearish TCG cross, the exponential 8-period, the exponential 4-period crossing the 8-period to the downside. IWM is the clear lead bear out of these three names. QQQ dumping as well after a gap up open to new all-time highs, losing the middle Bollinger Band, and we saw a ton of new all-time highs today. Facebook, Apple, Netflix, lots of big turnarounds from those all-time highs. Close at the low of the day, big bear volume. Momentum is completely favoring the bears, and we did see a break of 129.87 support. So we did break the higher low pattern. We lost the middle Bollinger Band for the first time in 2017. Pretty clear support that must hold here is 129.11 and 128.65. Look at this upside here. There's gaps in here. There is not a lot of support built in at all between the range of about 125 all the way up to 128. So the bulls really want to hold these consolidation lows. We didn't build a ton of support on the way up, but a couple support levels in the low 122, upper 128s, should say the low 129s, upper 128s. Lose those levels, and it's going to be pretty easy for the bears to run down here to the downside. So close at the low, keeping an eye out for a gap down open, watching the lower Bollinger Band. SPY lost its daily lower Bollinger Band today. QQQ still has that level of support to keep an eye out for. Bearish reversal candlestick. Have not seen a weak candlestick in 2017 on the weekly time frame for QQQ, and we're getting one this week with still 3 trading days left to go, but we will be looking for a reversal candlestick to form this week, because even if we see a recovery all the way to 131.65, it's still going to be a bearish reversal doji. So weakness in the markets is abound. The big time bear volume is the bears slapping us in the face and saying, here we are, and we're going to be looking for further downside from here and keeping an eye for short-term bounces on the way down, indicating potential bearish entry opportunities. I appreciate you watching. Hope you had a good day. We'll see you soon.